Hello and welcome to Dialogue. China opened the Beijing Stock Exchange for business on Monday with the first batch of 81 companies making their debut on the exchange. It's another major bourse in Chinese mainland after the Shanghai Stock Exchange and the Shenzhen Stock Exchange. So, what will be its role and how will it differ from the supplements and exchanges in Shanghai and Shenzhen? And what opportunities does it bring for investors? Well, to discuss these issues and more, I'm now joined by Hoffman Jiang, Managing Partner of Ernst & Young China North, Hong Hao, Chief Strategist at the Bank of Communications International, and Chen Jiahe, Chief Investment Officer at Nova Market Technologies. That is our topic. I'm Li Qiuyuan. So China is creating this hot new market, and this morning shares of all the 10 new listed companies had triggered temporary suspension twice as their prices jumped over 60%. And Hoffman, let me get your take on this. These shares continued rallying after trading resumed, with the highest surging by over 500% at some point. Was this something you expected, or was there anything out of your expectation?
Well, I think we all expect there will be a big jump, but as high as 500% is a kind of out of my expectation. And the good thing is that because there is price limitation, I mean the price fluctuation limitation for 50%. But because it's the first day, so there'll be low limit. So I think every investor enjoy this day opportunities for a big jump. So it's a bit out of my expectation.
And Jiahe, right, and Jiahe, why opening at this time, right? What does it mean for China's capital market reform?
Well, China has kept on reforming its capital market for many years, and this is just a part of the progress. I mean, we have successfully built the Shenzhen Stock Exchange and the Shanghai Stock Exchange. These exchanges actually serving the parts of economies surrounding them, like Shenzhen, Hangzhou, Shanghai, Nanjing, these very important cities. But when you look into the north, we have not got a very important stock exchange over here. The new OTC board was actually a primitive version for the Beijing Stock Exchange, and now the Beijing Stock Exchange is actually coming to serve all the companies surrounding it. So when the Chinese economy is growing, we keep on building economic progresses and capital market building, these kind of things. So this is just part of the process, I would say.
And Mr. Hong Hao, let me bring you into this. What do you make of the performance on the first opening day for the Beijing Stock Exchange?
Yeah, well, I think everyone has huge expectation for this board. After all, it's open at a record speed. Right? We've never seen a major exchange open within a matter of months. Right? So this one actually make it, a historic debut. So to match that, we have the best performer, surging 500% or more on the first day. I think, no one will reject a stellar performance on the first day. But I think, for the board to be sustainably attract attention from the investors, I think, more work needs to be done. And also, if the board gets too speculative at its early stage, it's actually not conducive for its long-term performance.
Yeah, whether the good performance or the growth can be sustainable is the big question, right? Some say if history is any guide, early markets tend to be irrationally exuberant and can encounter high falls resulting in losses. And what investment opportunities will the Beijing Exchange bring, Hoffman? What should investors pay particular attention to when we enter it?
I think because now that we have some 81 companies listed in the Beijing Stock Exchange, and actually most of them are from the new web board. And we know that there are over 7,000 companies in the new web board, and actually these 80 companies actually should be the most with highest quality company. So I think there are many investment opportunities, but still I may want to warn that actually because all these companies are at their early stage of development, so maybe the investors should be cautious about whether their anti-risk ability would be questionable, and also there may be some uncertainty about their long-term business development because they are comparatively small in size.
Right, and China says it wants to build the exchange into this major hub for innovative small and medium-sized enterprises. Jiahe, why that positioning in particular for Beijing, serving the innovative SMEs?
But one of the most important reasons is that we have already got stock exchanges in both Shanghai and Shenzhen for companies like such, because currently China is transferring from what we call the old economy, including things like investment, infrastructure building, export, finance, property, to a kind of new economy that includes things like technology, this kind of new material, medical services, kind of things. But when you look at Shanghai and Shenzhen, we have got stock exchanges over there to serve these companies. But when you look at Beijing, we don't have it. I mean, the north part of the China has not got this kind of stock exchange. So that's why we have this stock exchange in Beijing, serving places such as Zhongguancun, these kind of places.
And the launch of the Beijing Exchange came only 2 months after China announced the plan, right? Mr. Hong Hao, like you said, this was opened in a record speed. Now, investors, especially retail investors, may not have enough time or professional knowledge to get to know these 81 companies or pick potential companies to invest in. So what would be your suggestion for retail investors?
Yeah, well, that's a legitimate concern, really. But then at the same time, because of the requirement to buy into this market, it's actually quite high, right? So you need 500,000 RMB or more in your account to be able to buy. And also you have to pass, quite rigorous tests to be qualified as a qualified investor as well. So for now, it is really not directly sort of tradable for a small retail investors. But then I would expect that over time, as the market continue to attract interest, and also as the names on the board starting to get more and more crowded, then you would attract more and more retail investors to get in. But I think for now, it's really mostly a place for institutional investors.
But now it's been said that the access for individual investors are at 500,000 yuan, actually.
That's right.
Which is roughly about 77,000 US dollars. That's been brought down from the 1 million yuan in its former version, in a loose sense.
That's right.
So what kind of impact will it bring, do you think?
Well, I think, obviously it broadened the investor base, and also, 500,000, even though it's half of the initial 1 million RMB requirement, but it's still, a substantial amount of money to participate. I think it automatically screen out, a lot of the smaller retail investors who, like punting on the stock market daily. And I think, for this board, on the first day, you've seen, epic volatility, even though the volatility is tilted upward. So I would say that, even the volatility alone is enough to deter, smaller investors to get in.
Is that the sense you're sharing, Jiahe? What do you think? Is this market for, institutional investors for now, or the retail investors could also get into it?
Well, I would say in most cases, I would say it's actually the market for institutional investors. I try to look at these 81 companies. Most of them require a very professional knowledge. They are in very subtle industries, very small industries. They're not like companies like I have recently been buying, like China Mobile. This kind of very large companies. It's very easy for you to understand. But they are kind of very small companies. You have to do a lot of investigation into each of them. You might have never heard about them until you see them, see their name in the stock exchange. So you have to do a lot of research to understand each company, their industries, why you should buy this one, not that one. So which means you have to understand all of them to pick the very best one suitable for you. So that's actually not the work for retail investors. I would say it's for institutional investors for sure. But when retail investors want to get in, they can buy the funds of these institutional investors. So that's another way that we can go into this market.
I see. And talk to us a little bit more, Jiahe, about these 81 companies listed on the Beijing Stock Exchange. How good are they? What are the potentials there?
Well, I have not been able to go through every financial report of these companies, so I can't say which company is good or which one is bad. But I would say for such a large economy, when you look at it, 1.4 billion population, we got 81 companies selected out of these millions of companies and put onto the stock exchange in the first time. Investors would tend to believe that they are really good companies. I mean, they have passed all the tests, they've been selected. So these 81 companies would usually be of having pretty good qualities. But you still have to go into the financial reports of all of them, and you would not say that every one of them would be good, because business failures happen sometimes.
And Hoffman, how does it compare with what's been done there in Shenzhen and Shanghai? I mean, how does it compare with the already existing Star Board in Chinaxt?
I think that because the difference is mainly, I think, the size of those company and also the market cap. Because the threshold for the listing is what more lenient to at the Beijing Stock Exchange. So I think, as I mentioned, all these companies are at their early stages. So I agree with the other guest said that the investor should have do their own research because the risk is competitive high as compared with the stock market.
And you know, whenever we create a new stock exchange, people would like to compare it to the Nasdaq, right? Mr. Hong Hao, let me get your take on this. People like to make predictions as to when the new stock exchange would be growing into something as big as the Nasdaq, because that was also in the beginning to serve small and medium-sized enterprises, and a lot of legendary tech giants are born there, right? They really nurtured a lot of star companies. Do you see some similarities between the Beijing Stock Exchange and the Nasdaq, or what are the differences?
I think we have already a sort of a Chinese Nasdaq in Shenzhen, which is called Chinex. I think the Beijing Stock Exchange is a nice complement for now, to the existing boards that's been in place. For example, in Shanghai, we have the Star Board as well, and that has been quite successful. So, we can say that, over time, with the general reception of this board growing large, and attracting more and more companies to get listed there, I would say that it would be one of the major exchange that is nurturing the Chinese tech companies going forward. I think, for the Nasdaq, it happened, from zero to the cradle of the US tech. The process took about almost 15 to 20 years, right? And also, the process somehow coincide with the boom in the US tech companies as well. So I think the backdrop of the era is also very important to determine the future of the exchange.
Right. The Nasdaq has a history of almost 50 years. Of course, the scale of the Beijing Stock Exchange is much, much smaller at this stage. Jiahe, what do you think? I mean, Nasdaq is now the world's second largest stock exchange. It has more than 4,000 listed companies there. Beijing Stock Exchange only has 81 now. But give it time. Give it time. Would you see that it would grow into something as big as Nasdaq?
Well, I'm not really sure whether it will be as big as Nasdaq or even larger than Nasdaq, because if you compare the economy of China and the United States, they're at approximately the same scale right now. US has 2 stock exchanges, China has got 3 major ones. So I would say it's a possibility that will be larger than Nasdaq. Another thing is that Chinese per capita GDP currently is only 1/6 of the United States. We have a population like 4 times of the US. So that means when you have a New York and Nasdaq in the United States, mathematically, you should have like 8 stock exchanges of the same scale in China. So now you have 3. But you don't know. I mean, it's a very small start at the very beginning. But it would attract a lot of good companies from places like Wangjing, like Zhongguancun. There are China's best tech companies over here. So Beijing Stock Exchange surely have a lot of opportunity to give investors.
All right, hold your thoughts. Let's now take a short break on Dialogue. We'll be right back after this short break. Don't go away. Welcome back to Dialogue. So we're talking about the Beijing Stock Exchange today. This is the opening day of this hot new market. And Hoffman, let me get your take this time. The new third board has long been criticized, having the problem of lacking vitality, lacking liquidity. Do you think the Beijing Stock Exchange would also face similar problems?
No, I think the setup of the Beijing Stock Exchange actually is to solve this problem. Because first of all, the threshold for the individual investor has been lower from 1 million to 500,000. Is one thing. And actually, we see that the number of the individual investor has already been up to 4 million. So it's a big jump for the investor group. And on the other hand, because of the Beijing Stock Exchange, there will be a channel for all those companies to have a chance to get listed in the Beijing Stock Exchange. And also the chance of the companies transfer their listing venue from the Beijing Stock Exchange to the stock market and the Shenzhen board would be improved. because for those companies that are not qualified for listing in the stock market, they could get listed in the Beijing Stock Exchange first. And when they become mature, there's a chance that they could transfer themselves to the other two markets.
And
So I
Daho,
think,
right. And Daho, just explain to us the relation between the new third board and the new Beijing Stock Exchange, because it can be confusing.
Well, the new third board and the Beijing Stock Exchange, they're actually quite closely linked. When you look at their working offices are very close to each other. I think they're in the same building. So, but they are very separated. On the other hand, the new third board is more like like a place where the good companies that get listed in the new third board would go to the Beijing Stock Exchange. So there's a kind of relationship with each other. They are under the same kind of management over here, but they are separated somehow. They have different requirements for the level of investors to go in. When you go to the new third board, you have to get at least 1 million or 3 million in order to register as a qualified investor. But when you go to Beijing Stock Exchange, it's easier. You only need 500,000, and you face much better companies over here.
That's quite convenient. Now, the Wall Street Journal published an article arguing that China's stock market needs better rules, not a new stock exchange. Mr. Hong, what do you think?
Well, I would say that the regulation over the years has been improving, especially in the past few years. We've seen new rules coming up for trading on the exchange, and also we've seen very forceful punishment on anyone who is doing illegal trading activities on the exchange. All right, so I would say that in terms of regulation, the Chinese market has already improved a lot, but that is not to say that we have no more room to improve. And embedded in every single market in Hong Kong, in the US, there are plenty of security frauds and needs to be investigated. So therefore, in every single exchange in the world, the regulation can always be better. Having said that, I think the new Beijing Stock Exchange is targeted at the SMEs. Right, so the SMEs, accounted for 70 to 80% of Chinese GDP and employment, and also the bulk of Chinese innovation. But then, the challenge for them really is that, when they need money to do R&D, they found it a little bit difficult to have access to loans, from commercial banks. And so I think this new exchange is targeted at that, just trying to solve the problem. So I would say that, China, regulation is already improving, but then at the same time, this new exchange is pertinent for the growth in the Chinese SMEs.
Yes, providing a good platform for the SMEs that are not big enough to be listed elsewhere. I mean, these little giants are really the engine of China's economy. And Huffman, what are your thoughts on this? What are your thoughts on this, on the statement made by Wall Street Journal? Do you agree with it?
Well, but yeah, I think there's some point, but actually we see that the China stock market has already ran through its reform with the implementation of the new security laws in 2019, and also we saw the success of the registration system and the reform of the stock market and the Chinese board. So I think, and also I see that the Beijing Stock Exchange actually also adopt some new change, like it take the legal form of a limited company, and also it adopt a membership management system. So we could see that the China stock market has, the reform has been proceeding well, and also with reference and benchmark with the international practice. So, well, I think, yeah, not that much agree with what has been said on that journal.
Dahe, your thoughts?
Well, when you look at Chinese market, it really has been improved a lot in the past many years. We see much more fine. The rules has been upgraded a lot. It's not only that China needs. Well, I think China needs both of them. China needs new rules. China also needs a new stock exchange. So it's not a reason that China should only have like 2 stock exchanges when we got 4 times the population of the United States. So we need both of them. And we're actually working on both of them. You keep on saying that the rules of stock market has been upgraded. New fine has been made to companies. Recently, a 2.5 billion fine has been made to a fraud company. So these kind of things been adding up. So if you keep on reading the Chinese news, local news, you find that both of them have been improved.
Now, some people are also making a link with China-U.S. tech competition, as capital competition is behind the competition in technology. Mr. Hong, do you think that the financial support for innovative SMEs can spur a breakthrough for China in its tech competition with the United States?
Yeah, well, let's hope so. Just now I mentioned that 80% of the Chinese invention and technology patents are actually held by SMEs. So if these companies they have more funding for R&D, I wouldn't be surprised to see they make even bigger, better breakthrough in terms of technological advancement. So I think capital is pertinent for innovation, and I think historically the Chinese companies have been resorted to the U.S. listing for new capital injection. I think with the new board and also with the existing start board and also the China export, it creates more and more venue for SMEs to finance their growth. So one should hope that this kind of capital injection will lead to more and more innovative solution in the Chinese economy.
What do you think, Hoffman?
Yeah, I'm not quite sure whether it's a breakthrough, but I think at least it will be impactful, right, on the competition, because previously the SME are limited of their development because of financing difficulties, but now that because of the new stock exchange, I think it will be very helpful for financing their development. So I think the impact will be impactful.
And Jiahe, your thoughts?
No, I would not say that China is starting this board only because China is in a competition with the United States. Actually, after Donald Trump, China-U.S. relationship looks like, from the point of view of investors, to be soft right now. The cooperation is actually increasing between the two countries. But China still needs the new stock exchange for its own tech industry growth. Like I have just said, it's a part of the large process that has been going on. So China keep on upgrading its capital market, setting up new stock exchanges, helping tech companies. But yes, this will be a great help to tech companies, especially the small and medium tech companies who can hardly get enough funding from other channels. But selling their stocks would be a very good idea. It also rewards the investors who engage into that rather than just lending money to the company and get the loan back. But when they invest in the companies, the stocks, and the company become a successful company, they can earn like 10-fold or 100-fold.
But Jiahe, do you think that the Beijing Stock Exchange will gradually develop as an international focus that could attract global capital and investors?
That would be a sure thing, because when you look at China's capital market in the past 5 years, one of the major things that has been happening is attracting more and more international investors coming in through things like Shanghai and Hong Kong connection program, Shanghai and London program, Shenzhen Hong Kong connection program, these kind of things. So a lot of foreign investors are rushing into China to buy equities, to buy fixed income. There's a huge amount of fixed income investment from foreign investors right now. So when we have a new stock exchange over here in Beijing, having a lot of new tech companies, medical companies, these kind of new companies, definitely international investors will rush in. That's a sure thing.
And Mr. Hong, how do you think about the prospect of the Beijing Stock Exchange?
Yeah, well, I think let's hope that the prospect is as bright as the first day performance. So many of these stocks are putting on huge first day gain, and I think that is surely attracting a lot of attention. I think going forward, as the board starting to attract more and more credible listing from the Chinese economy, and I think it surely is going to gain attention from international investors as well. For example, the article you quoted just now from Wall Street Journal, is a sign suggesting that the foreign observers are paying attention to the development of this new board. So I wouldn't be surprised, as time goes by, as the market capitalization and the number of listing on the board started to increase, it will attract more and more attention from foreign investors, and gradually, it will become like the start board and also like the China export that is, receiving active foreign tradings participations on those exchanges.
And final thoughts from you, Hoffman?
Yeah, I think more opening up measures to facilitate foreign investment in the Beijing Stock Exchange would be expected. And also because the QFII system has already been allowed in the new board, and I think it will be same for Beijing Stock Exchange, and also maybe the stock connects between the mainland and Hong Kong exchange will be also a room for improvement when the stock between Hong Kong and Beijing will be connected. And also I think with stepping up effort, I think we could see a bright future for the stock exchange to attract the international funding.
All right, that's all the time we have for now. Thank you very much for taking the time talking to us. That's Chen Jiahe joining us live there in Beijing, and Mr. Hoffman Chang joining us in Beijing via Zoom, and also Mr. Hong Hao joining us live via Zoom in Hong Kong. Thank you. We appreciate your insights and perspectives. And that's going to do it for this edition of Dialogue on CGTN. I'm Li Qiuyuan in Beijing. Thank you so much for watching. Follow us on YouTube and Twitter as well. We hope to see you next time. Bye for now.